Where are we in the Bitcoin cycle?
Let's bust another myth, okay? And this is a big one, perhaps the biggest one, is the myth of the 4-year cycle. Whoa, this happened 3 times. Surely it's gonna happen again, right? This is complete crap. This is a very important observation because this is actionable, and I will tell you how this is actionable. Where is our acceleration phase? So let's answer this. This is the biggest misconception. Anyone who's there holding on to their Bitcoins because we didn't have euphoria, that is just a wrong argument, all right? As long as all we have is this linear advance in Bitcoin, from any given top, it's logical to expect that the downside remains limited, and that's actionable.
Archie.
I guess that begs the question, where are we right now? Because, when I have a look at that weekly chart, if you just expand all the way to like the 2013, this just looks like an expanded sort of 2013 to 2016 section. It doesn't look like we've had what we would typically expect to happen in a bull market, which is at least some kind of steepening of the curve. It's just been a very consistent 3-year uptrend that kind of looks like what happened. Is it not 2013? It's from about 14 to 16, 17. Before the blow-off top. The blow-off top was late 16, wasn't it?
Yeah, right, up here in 2017.
Or late 17, sorry. Yeah. So, before that blow-off top started in that cycle, it just looks like something similar to that, a little bit more prolonged. And so it's really hard for a lot of people to have some kind of conviction about where we are, because on one hand, the bull market's been running since, the bottom of the bear market at 15,500. Bitcoin's put on more than 100,000 since then, and it's given up a little bit. But by the same token, we've got these macro factors starting to play to our favor. Interest rates potentially coming down further. We've got the business cycle turning up with that potentially, liquidity increasing as well. All of these things that people talk about. But ultimately, when we look at this chart, because that's all that matters at the end of the day, when we look at this chart, where are we in the business cycle, in the Bitcoin cycle?
You make very good observations in terms of the steepening of the curve and all that. So let's address, we busted one myth, okay? The myth that a big deleveraging event means it's the bottom, okay? Now, I just pointed out a couple of examples, but you can look at the whole chart and see that you're gonna have big deleveraging events in the bull market, and you're gonna have them in the bear market, and it means nothing, okay, for price action. So that's one myth. Now let's bust another myth, okay? And this is a big one. Perhaps the biggest one, is the favorite in the space, is the myth of the 4-year cycle, or the halving cycle. However way you want to call it, right? So this is the biggest meme of all, and the biggest myth. Now, why? Sure, I probably have this on the chart, right? Because we have this 4-year cycle. Let's take a look at this, right? Take a look at this. All right. This is the 4-year cycle on the chart, right? There's a little bit of alpha in there for those who can pause the video and take a good close look at the chart. The 4-year cycle, right? Where is that coming from? Or the halving cycle, you can, but what is this? The 4-year cycle is like, oh, look, we got 3 green years and then 1 red year, and another 3 green years and then a red one. 3 green, red, whoa, this happened 3 times. Surely it's gonna happen again, right? Okay, this is complete crap, okay? There is no 4-year cycle. There are no cycles, okay? Now, what do I mean by that? What do I mean by it is this. First of all, let us work by hypothesis, right? Let's work by elimination. Let's assume there was a 4-year cycle, okay? Okay, let's assume there's a 4-year cycle. How does that help us? And does that help us? Well, let's take a look. You were there in January 2021, right? And you remember everyone calling for the 4-year cycles and so on and so forth, right? Nobody called that 50% pullback, which got everybody wrecked, right? And why they didn't? Because take a look. First cycle, you had, let's say it starts from here, right? Big bear market, a big move up, 1 pump. Mega pullback. By the way, this was 80%, right? This looks small on the chart, but it's 80%. And then another big pump, double pump, okay? And then you call this one cycle. I don't know, how is that actionable, right? You have 80% pullback in here, right? Another pump. Mega big bear market, bottoming structure, and then a single easy parabolic advance. This was basically the golden run of Bitcoin. It just went up and up and up. Sure, you had low time frame volatility, but it was a parabolic, unbroken advance. No double pump, a completely different type of cycle, if you want to use the word cycle, like completely different. And so many people saw this double top, and in here, they were calling for another one, right? And you know what? They got wrecked, and they lost it all at the pico bottom. Why? This cycle, yet again, was completely different. You had a prolonged period of diminishing volatility, big puke into a low, but this low did not give rise to a nice parabolic advance like this, right? No. What you had instead is a big years-long trading range. That was brutal. If you didn't lose it all here, you lost it all here, believe me. And we can look at the data and the statistics. The amount of people in the BitMEX days, right? The amount of people who lost it all here, or in the, Black Swan event of March 2020, either that or in the infinite, endless chop that lasted years. How does this resemble this? It doesn't, or that. It doesn't resemble it at all. No cycle whatsoever. And then what happened? We had the Black Swan event, and then V-shaped recovery, and then a very sharp and very strong parabolic advance, but very short, okay? And then people were expecting now another big move like 2017, which would have put Bitcoin, in 200K or so back then. And you know what? It didn't happen. It stopped at 69 or 65 at the time, did a 50% pullback, and then an echo bubble, slight higher high, 69K, and then a severe bear market. How does this cycle resemble any of the other ones? It doesn't. And same this time around. Now, what we had this time, and this is pointing to what you were talking about, okay? So now let's address the current situation. There's no cycles, okay? They don't look the same. They don't act the same. They don't have the same dynamics in any way whatsoever. So for the point of view of risk-taking or positioning, it's meaningless to say cycles. That's the first thing to understand.
Let me just push back against that for a second and say, I think it looks to me, if I was to make the case against what you've just said, I'd say it looks like it's an alternating cycle. There's certainly a case for that, in that the double pump of like 2013-14 was expected in 2021, but it was muted because of the shitcoinery and fuckery of FTX and Genesis and, Luna and all Terra, all that sort of stuff that muted what should have happened. What was expected to happen in that second pump. And that probably would have, taken shape in a similar vein to the cycle from 2013-14. And then we've got sort of a prolonged build-up of from 2014 to 2017 with the blow-off top, which I kind of liken to what's happening now, except on a longer time scale. And we probably won't get a blow-off top at all, or if we do, it won't be to such a great extent. So I guess, it's easy to to point to mitigating circumstances and make excuses, but I guess that's the counter narrative to what you've put forward about, none of these cycles look the same, but they kind of do behave in the same way. Not perfectly, but kind of do.
It's very, very interesting what you're saying. I don't think you're contradicting what I'm saying. I think, in fact, you're corroborating, because you're always going to have new elements that come in the market. In this case, you're right, the FTX selling paper Bitcoin and probably stunting the growth of Bitcoin, along with other bad actors, by the way. Yes, and this time we have other factors and so on and so forth. You're always going to get new factors. And the point is, there are no cycles. When I say there are no cycles, when I say that, I say from the point of view of risk taking. Now, from the point of view of the analysts, there's going to be some very beautiful cycle-like things I can point out to, and I will. And the first thing is what you mentioned, which is, you mentioned, and you're 100% correct, you had almost every cycle, or basically you could say every cycle, you had a linear growth of Bitcoin, followed by an explosive parabolic growth. And this happened every time. Slightly different, but it rhymed every time. Yeah, we can even do this, right? And then you had it even here. Now, this was more messy, like I pointed out, but still, right? Linear followed by parabolic, right? So this is definitely something that rhymes. And you can see here, we only had the linear part, right? It's been very long, but it's been very orderly. But we didn't have the blow off top. And you're right that this is a very important observation because this is actionable, and I will tell you how this is actionable, right? Basically, you're like, where is this, right? Where is our blow off, right? Where is our acceleration phase, okay? So let's answer this. First of all, to all the listeners, put this in your head. The acceleration phase does not have to come, okay? We don't have to have a blow off top. This is the biggest misconception. So this is the myth number 3 that we're going to bust. Markets only top when you have a blow off top with a massive euphoria. That is simply not true. You can have many different kinds of market tops, including euphoric tops, but you can have distributive tops, which can take many forms, rounded tops, ranging, all kinds of variations. It does not have to blow off, okay? So anyone who's there holding on to their Bitcoins and saying, well, I'm just going to hold because we didn't have euphoria. Well, first of all, you may be bad at judging euphoria, right? Because the market is a very complex beast. But even if we didn't have euphoria, that does not mean the market didn't top. That is just a wrong argument, all right? But we didn't have euphoria from the point of view of price action and from the point of view of Bitcoin. That doesn't mean it will come, but what it does mean that is useful and actionable for all of your listeners is that logically, right, a child can understand that. If we didn't have this acceleration phase in the Bitcoin price, well, how can we logically expect to have another 75% bear market, right? All of those bear markets came after we had a big blow off top. So just logically, right, you don't need to be a genius or a market wizard to understand that without this, it's illogical to expect this. Now, that's very useful, right? If you think about it. That's very, very useful. Now, I've said that in the past, as long as all we have is this linear advance in Bitcoin, from any given top, it's logical to expect that the downside remains limited to 50% rather than the typical 75, 80%. Now, that's actionable.
You could almost argue that, those straight lines that you've mapped from the bottom of each bear market, that's kind of the adoption profile growing from cycle to cycle. And the bull and bear markets, the upswing and the drawdowns are kind of distractions from that. And if anything, the bear market's just a reversion to that adoption line that constantly goes up.
100%. Now, that's not guaranteed to continue, right? But what we can only deal with is what's in front of us. So for that, I remain optimistic for Bitcoin, even though we have unprecedented risks that we didn't have before. But I remain optimistic on this adoption and on the possibilities that Bitcoin brings to the world, right? So I remain optimistic, and I said, well, if the downside is limited to 50%, right? As long as, from the point of view of probabilities, right? It's not about predicting the future. It's about making smart decisions along the way. So let's say Bitcoin goes down 25%, right? Then you start thinking like, hey, you know what? The downside is limited to 50%, most likely, right? And, or at least in terms of the data that I have at hand. And the price is already down 25%. Well, you know what? It might be smart, instead of thinking, oh, a big bear market's coming, 80% it's going to go down 80%. You must start thinking, you know what? I'm going to start being more aggressive. I can start having a certain type of exposure, and I can know where I'm wrong on that, right? And if the price comes closer and closer to the point where my thesis is wrong, that gives me more and more opportunity. Do you know what I'm saying? So
Sure.
if price goes down and I'm like, it's the point of max opportunity is the closest possible to my invalidation, right? So for someone who's hodling Bitcoin and you're thinking, maybe you've been hodling for months or years, right? So most likely you're up, right? And you don't want to start making poor decisions if the price is down 30, 40%, right? Because you're like, well, maybe that's the point of maximum opportunity.